Hey guys, let's just do a quick update. I noticed something on gold real quick here into the close. Um, one of my guys one of my guys mentioned that IBB got crushed into the close today. I think this is worth noting. I mean, technology sector was one of the first ones to kind of roll over and struggle at the beginning of the year, right? So this is what I see in this move here. This was a series of lower highs that were equidistant. Same thing here. So this was a big range trade, right? Then you flip the bullish here when you took out these highs. But this is what I call no man's land when you're in between a TMS change or a TMS pivot, I call it. So this was a prior downtrend. This is a lower high. This is a lower high, equidistant lower high. When you take that out, you move to a new higher high here. Okay, so technically speaking, the technical market structure, or what I call TMS, was bullish. So between this downtrend and the pi cycle, the pi line, is kind of no man's land. So this is where a lot of traders get tripped up. But what I would say about this, and I think it's kind of maybe will be important about the overall market, is there was a lot of distribution here, but you basically double topped and failed in front of pi, which is in a down cycle, right? Price is below this line. So that's bearish. If we get more follow through and the market can't hold these lower bands, then the probable move is for a move back down here on IBB. So I think that would spell more of a risk off trade for stocks. Now today, I mean, look, we just broke down barely below the 8. It was a bearish day, obviously, but then we came right back up. So for me, 2165 is kind of the next key pivot to watch. I've already highlighted that before. And then 2140, that's a big trigger. If we break 2140, as where the market stands now, that's your higher low. So that would mean a test of these lower bands, or we move back down to pi, the 200 and pi, which is 2050 area, 2047. So let's say it's just one down day, right? The VIX did creep up today. I took some more of my calls off, so I'm trading that around. It's back at pi, so we'll see. It's either the next push through is here up here to 1516, which would be nice and profitable for me, or get a chance to buy again down here at the bottom of the range. But this is kind of starting to turn as well. So there's a little bit of a tone shift in the overall market. If you flip this to 2 standard deviations, 2 standard deviations, right? So my range now is 11.5, and we're at the top end of the range. So that's why I was a seller. But let's see. I'd like a move back into 1516. But what I wanted to touch on in gold is starting to move bearish also. I don't really know what that means for global macro. I think it's just more of a trade on the dollar, but it is what it is. So what I'm noticing here is that we're in a range trade, which I traded pretty well. We're buying, selling, buying, selling, buying, selling, buying, selling. But these lows are they got taken out today. So that's meaningful. You can see how pi is starting to roll over. That's meaningful. You have a lower high relative to these highs. That's meaningful and bearish. These are equidistant lows that broke. So now you have a lower high and lower low. This is technically now in a downtrend. You have price below the 200 and below pi. That's what I call the southern hemisphere. That's bearish. So gold has moved intermediate term bearish now. Now, would you hit them down here? No. You're low within the cycle. You're oversold. The next play is to play a short on a bounce back up into the upper bands or around the 30 hour. All right. 50% of a retrace of this move is about that same area. So it's like the 30, 35, or excuse me, 34, 30, 40 area. 30-40 area. So that's where I would look to get short. I'm still playing a core long because I'm playing a little bit longer time frame. Um, but I'm not afraid to flip and get short if we get that kind of bounce. If we don't get the bounce and we get another move into support, then I'm actually going to buy because I'm pretty light long right now, and I'm light right around pi, so I'm okay with my average is right where it should be. If you're long gold from up here, this is your average. I mean, you're way off sides. That's just, you know, you're wrong at that point. Your average is way too far from the market. All right, it's the same thing when I was building a position back here. I kept my average close to the 200, and then we got the nice rally. So we could easily, so you can start to see these bands are rolling over though. So gold could easily trade back down here to 1311. This is a major, major level, bigger picture. It's the TMS pivot, 1311. All right, if you break 1311, then we can probably go to like 1225. But we don't need to make that call right now. So if you want to play the intermediate term, the near term, you sell the next bounce. All right. If we don't bounce and you go straight to 1311, I'd be a buyer there. But that's kind of new. So we'll see what gold brings. I think this is trying to roll over though. So that's my call there, guys. We had quite a few new people into the room today. So if you are new, I would just encourage you to go to jenkinsrm.com. RM is risk management. jenkinsrm.com. Sign up for our free trading room. I also have details on the options seminar that's coming up this weekend. Yeah, so check out the site and we'll see you guys in the room.